Hey everyone, Chris Carr here, president of Freedom Home Loans, and today we're going to go through the January 2022 monthly market report. And in this month, we're going to cover four topics. That's inventory, buyer activity, home equity, and a 2022 market forecast to wrap it up. So let's go ahead and get started. Let's dive in. I'm going to share my screen here, and welcome to the 2022 monthly market report. So as we kind of wrap into things here, start into things, I'm going to start off with a quote. It is possible that rising mortgage rates will slow the housing market, or the Fed might raise rates sooner than expected due to the recent pickup in inflation. But I believe one thing is certain: inventory will tell the tale. So inventory is usually one of the biggest indicators in the real estate market. And I've got a little bit of bad news here. Listings are at record lows and inventory is down pretty much across the nation. Okay, so inventory being a big factor here in determining where we're going and forecasting in the market. Some good and bad news, but just kind of started off here that housing inventory is lower than last year, which was a record low. So pretty much across the nation, national average at 26.8%. Down, I think the only state up is Idaho, is up quite a bit, 55%. And on the inverse of that, Florida is down almost 50% in inventory. So that's driving prices through the roof in these areas where it's down, but a national average of about 26% lower than last year, December 2020 compared to December 2021. So months inventory of homes for sale. Here's a little chart to kind of just show this. If you've watched these reports in the past, you've kind of known and seen that, you know, December, January of last year was all-time lows, 1.9, and we're kind of trending in that direction again. So inventory is going down and homes are just flying off the market, just like they were for the better part of last year. On to the next slide. The next section, buyer activity. Okay, so here's some good news. Showings are still very strong. They're greater than last November. Going back and looking at November 2020, 156 minutes per property. This is kind of the average showing time, and 176 this November. So showing times are still up. Buyer demand is still up. We're still crushing pre-pandemic numbers on the showing index over the past 5 years. So we go back and look at, you know, quote unquote, the normal years, or the last normal years of 2017, 18, and 19. You know, we can see we're up over 50% with the average showing time in the months of November. Okay, so still a very strong demand. Buyers are not getting discouraged. They're still out there trying to find the home that fits for them, as the definition of home ownership and what a home means to people has changed significantly over the past couple of years. And one thing to note here: impressive year-over-year demand seen across the entire country as holiday home showings traffic heats up. Usually it's down a bit, but the traffic is still you know, quite higher than it's been in a very long time. So year-over-year increases pretty much across the board in every region in the United States except for the West Coast. Showings traditionally lag during the holiday season, but the data we're seeing tells us that buyer demand remains strong. The fact that every region showed a year-over-year increase, even albeit the 3% increase on the West Coast, indicates that buyers are undeterred. It speaks to their desire to keep searching for their next home. Okay, this is from Michael Lane, the VP of Showing Time, right, where this data came from. So the pending sales are higher than pre-pandemic numbers. So pending sales are still up. Sales are still up overall. Just the inventory is super low. So houses continue to fly off the market in the desirable areas. Pending home sales over the last 5 Novembers, like I said, the last kind of normal years pre-COVID, 17, 18, and 19, we're still up quite a bit, 20% higher than those years for pending home sales in November. So still a strong sign there as well. Average days on the market, November 2021, still very strong on average in the nation, national average of 18 days on the market. Okay. Typically a neutral market is about 6 months inventory. We're about half of 1 month. So still a very strong seller's market because there's not enough inventory. You can't sell what you don't have. If there was more inventory, we would be blowing through sales records because the demand to buy homes is high and just the supply is low. And maybe this additional wave of coronavirus has created another period of uncertainty. So people are unsure if they want to sell or where they're going to move or what they're going to do with their personal lives, family lives, careers, things like that. Like we saw when the pandemic hit, there was a lot of uncertainty. So people just stayed still. Maybe that other wave is causing a little bit of that as well. But still, the national average days on market is 18 days. Existing home sales, like I mentioned, still blown through the period from 2014 to 2020 pre-pandemic. We're still significantly higher above those numbers for existing home sales. And if you can kind of see the trend here, minus those few months after lockdowns and curfews and everything kind of hit different areas of the country, there's a several month period where that dipped, and then that pent up demand kind of exceeded the line here that we would use to kind of chart this out. You can see a pretty stable line pretty much all across. If you average out those two, that big dip and that big bump with that pent up demand, to be a pretty healthy increase since 2014. All right, so the biggest, most valuable lesson right now is to understand where we sit with home equity. Okay, where we sit with home equity. The lack of insight around home equity presents an opportunity for real estate professionals who are always looking for touch points with past clients. Okay, reaching out, touching your clients, your contacts, and just asking, if their current home is meeting their future needs, understanding the value of what people have in equity, what it can do, paying off debt, paying off higher interest rate debt, consolidating, getting a lower interest rate. There's a handful of things that people can do still with the equity that's in their home. Get rid of mortgage insurance, get rid of PMI, MIP, getting just a plethora of things that people can do with home equity: new construction, renovation, buying additional properties. So taking out a refinance loan, locking in good 30-year with the equity that you have, buying an investment property, something like that. So there's a lot of education to go around what home equity can do for you. According to CoreLogic, last year in their the Q3 homeowner equity report, in the last year, average home equity gain for the US was $57,000 of homes that had a mortgage. $57,000 increase to your personal or family net worth for every property that you own on average across the US. That is life-changing if you understand what that can do for you. And speaking with a good certified mortgage advisor or real estate professional on your team that really has your best interest in mind. So a 31.1% year over year increase in equity for US homeowners with mortgages. That is unbelievable. Unbelievable. There's $3.2 trillion year over year total increase in equity in US homeowners with mortgages. That's just bonkers. And to kind of recap that, this summer, home price growth reached the highest level in more than 45 years, pushing equity gains to another record high. And this is how it looks by state. So homeowner equity growth is still surging. We're looking at Q3 2021 compared to Q3 2022. So you see the national average was about 56,000. You can see some areas with less than that, some areas with almost with double that for California's sake or the West Coast. But for us, in Colorado and Texas is our major markets. I own 5 properties in Colorado. 5 properties in Colorado with a 78,000 average increase in equity. That's $400,000 increase in my family's net worth. Owning real estate, understanding mortgages, leveraging it smartly to go to work for you. And that's life-changing, generational changing equity if you can understand how to work with someone that can help you tap into that, manage that, and grow that with you. So not only have equity gains helped homeowners make seamless transition out of forbearance and avoid a distressed sale, but they've also enabled many to continue building their wealth, right? So going into the forbearance numbers here, I think it's one of these next slides, but there was this massive fear of COVID coming out, forbearance, everyone's, just millions of foreclosures. So not only was that false, in addition to that, those people that were kind of were between a rock and a hard place, were able to, on average, pick up $56,000 in equity. So not only were they out of that situation, they could sell if they need to, they've also picked up, on average, $56,000 in wealth riding out the storm. Okay, U.S. households own 36.8 trillion in owner-occupied real estate. That's just owner-occupied real estate. 11.5 trillion in debt means there's $25 trillion in equity for owner-occupied real estate. In inflation-adjusted terms, homeowners had an average of nearly $300,000 in equity in Q3. That's a historic high. Homeowners have an average of $300,000 in equity. And that's a national statistic. So some areas going to be, maybe double or 3 times that. And some areas might be a third or half of that. But on average, $300,000 in equity. That's unheard of. So lastly, to recap this monthly market report, what to expect in the 2022 housing market. So let's start off with mortgage rates. Mortgage rate projections as of December 2021. This is a trailing statistic here, or forecast. So at that time, rates were projected to be about 3.7 at the end of 2022. We're still in January, and we have seen a significant increase in rates in the past 2 to 3 weeks. All right, so this was the forecast in December, forecasted to hit 3.7% by the end of 2022. Just a few weeks ago, before what's happened over the past couple of weeks, this is as January 6th, the 30-year fixed rate was at 3.22% on average across the board, which is, if you can kind of look into this chart here going back about 5 or 6 years, that puts us about 5/7/2020, okay? So going into what's happened over the past couple of weeks, we can see the average conforming rate for a conventional loan, just across the board, regardless of discount points and LTVs, is 3.75%. Okay, we've gone from 3.22 to 3.75 in a matter of 2 weeks, right? So FHA, VA, you can kind of see it across the board here. Our VA rates tend to see a 2 in front of it, even though the average here is about 3.5. Rates have gone up quite a bit in the past couple of weeks, not to deter, just to kind of give an idea of where we stand and what's gone on. So this may put pressure on the Fed to raise rates a bit. In inflation numbers, kind of impacting that as well. So like I mentioned, forbearance, right? Forbearance started off in May 2022 with almost 5 million people in forbearance. We now have seen that number fall below 1 million for the first time. So less than 1 million of those nearly 4.7, almost 5 million people in forbearance. We're less than a fifth of that, or close to a fifth of that, at under 1 million now today. So nowhere near as many people in trouble that were when the forbearance wave first came out. And then we look at the percentage of distressed property sales here as well, been very, very flat for 2021, less than 1%. Represented less than 1% of sales in November. So distressed sales are, I would think near an all-time low, and have been for quite some time. I don't know how much lower than 1% we can go compared to 35% on the tail end of the Great Recession. So a couple more things here just to wrap up. We may see a little bit of uptick in the foreclosure rates in 2022. Just an uptick though from an extraordinarily low level. Okay, so from half of 1% to 1%, you may see headlines of foreclosures doubling or going up 200%, but they are so significantly low right now. We're not expected to see a big increase. We expect delinquency rates overall on home mortgages to actually continue to remain quite low. And this is the leader of senior leader of research for CoreLogic. Okay, and how that looks on an appreciation graph here. So has home price acceleration peaked? So this is the acceleration. What this means is the home price appreciation still going up? Is it going from 10% to 12% to 18% to 20%? That is the growth, okay? So we can see pretty much across the board, and I've been saying this for months on our monthly market reports, that we're reaching near the peak of acceleration. Not that it's going to decelerate, not that it's going to depreciate, it's just going to deaccelerate. So I've mentioned a couple times, I think in November, December, on the monthly market report, it's going to feel like you're driving 100 miles an hour and you're going to slow down to 60. You're still going forward, you're still going fast, but it's not as fast as you were. So it's going to seem a lot slower as you slow down, but we're still going fast. Appreciation is still going, it's still positive. Okay, so it might not be 18%, but maybe it's 10%, 12%, 6%, wherever that number ends up being. And appreciation is always hyper local with where your particular market and where your house is. Okay, so home price acceleration looks like it's peaked, it's plateauing, means it's staying constantly high, but it may start to taper off a little bit with the acceleration of that appreciation slowing down, but still appreciating. And what that looks like here on this kind of forecast from these 7 different institutes across the board on average. And again, appreciation is hyper local to the market that you're in. So you might see something, California, New York, for example, will be a lot different than Texas or Colorado. Okay, so on average across the board, 5.2% according to these forecasts here. But we've already seen a lot of these adjustments improve. I think most of these started off at 3 to 5%, and now they've reassessed those up, to 5 to 7% on kind of within that range. So I expect that to be probably a little bit more this year, just because sales are through the roof, pending sales are through the roof, and inventory is still quite low. Okay, so just supply demand issue, low supply, high demand, probably going to continue to see good home ownership wealth created through home appreciation. So lastly here, so overall, I do think that 2022 will be another strong year for housing, albeit a little bit higher mortgage rates. And we do think home sales will continue to rise and actually reach a 16-year high in 2022. So again, senior leader of research at CoreLogic projecting that home sales will reach a 16-year high in 2022. Okay, so that all is pretty good information. It's just inventory is low. As I kind of recap here, inventory is low. Buyer demand is super strong. It still looks like at this time to be a pretty strong market in 2022. And I think the key takeaway here is really understanding what home equity can do for you. If you have any questions, real estate or mortgage related, please feel free to reach out to myself. And always remember, if you have any family, friends, or coworkers looking to buy, sell, or refi, we would love to count on you to send them our way so we could take great care of them. Again, Chris Carr here, Freedom Home Loans. This is your January 2022 monthly market report. Thank you.